But long-term investors, guys that are older that may still read the Wall Street Journal, they believe in real-world assets. They believe in the business plan. They believe in the management team, a board of directors. For the coins to go forward and increase in value, we feel, at least, that that's going to be the business model that works.
Hey folks, Flo here with Blockchain North at Futurist 2024. I'm here with Alex from Unicoin. Why don't you give us your 30 seconds, not 30 minutes. Who are you?
I'm the Chief Investment Officer for Unicoin. It's a second generation cryptocurrency that's going to be launching later this year with a totally different business model than what's out there right now or what's launched previously.
And in what sense then?
A lot of these coins launched and they don't have the capability or the structure to do marketing or branding, which are the two pillars in business. We have access to about $3 billion worth of real estate that's in escrow right now, our holding company that owns Unicoin. So we're going to use those assets to outspend all the altcoins combined in the next 2 years. We want to spend over $2 billion worth of marketing worldwide.
That's incredible. So marketing and branding to you are the two pillars of what? Of successfully launching?
Yeah, because we found that in crypto, in one of the few business industries, there is nobody doing any branding or marketing. Okay. So we figured Nike has competition with Converse and Adidas. Burger King has competition with McDonald's. Bitcoin has no rival, right? It's just Bitcoin. And nobody can compete with Bitcoin because they're known worldwide. So you have to be able to compete with them, brand your name, not only here in the United States or in Canada, but worldwide. So those assets that our home company owns will enable us to leverage those assets to be able to market and grow by acquisition.
I want to challenge you on that assertion if you don't mind. Yeah, you ready?
Sure.
I'm not, so basically speaking to a lot of Bitcoiners, especially the maxis, I suspect that the answer would be along the lines of Bitcoin does not need to market itself because its intrinsic properties, around scarcity in particular, level of decentralization, security, etc., are so potent, and it is the only one that's completely scarce.
Right.
That no one can really compete, and it has proven to be more or less true over the last, let's say 16 years. What would you say to that?
Well, Bitcoin only owns 50% of the market right now. Every year they've lost a little bit of market share to other altcoins. If the market grows from 2.5 trillion where it is today to 40 trillion, we feel that they're going to continue to lose market share to other altcoins. Not because Bitcoin's inferior, it's just that there's going to be second generation coins that make sense, that are less volatile, less expensive. The problem with Bitcoin is I think the founder of Bitcoin, whoever he may be, we don't know who they are, would probably roll over in his grave right now if he found out that the biggest ETFs and the biggest institutions are hoarding all the Bitcoin on the market, and eventually they will hoard all of it if it continues to go at the pace that they're going. So was that really the intention for Bitcoin enthusiasts to have Larry Fink be the biggest Bitcoin owner? So they were supposed to be independent of the stock market. They're not. If the stock market goes down or if there's a world event, Bitcoin goes down. So Bitcoin isn't independent of the stock market. We feel like the crypto market will be the next leg of the stock market. The S&P has 11 sectors. We feel like crypto will be the 12th sector of the S&P. So it's going to mimic the stock market. So the coins that go up in value are going to be the coins that have profits, that have a management team, that are being able to be traded on an ETF. Why would you trade Shiba Inu or Dogecoin that are meme coins on an ETF? Why would anybody buy that? Nobody would. Only young people who are just trading it right now for instant gratification to make a quick buck like in a casino. But long-term investors, guys that are older that may still read the Wall Street Journal, they believe in real-world assets. They believe in the business plan. They believe in the management team, a board of directors. For the coins to go forward and increase in value, we feel, at least, that that's going to be the business model that works.
So you mentioned $3 billion in escrow in real estate, essentially acting as collateral for the issuance of your token. Maybe you can tell us when?
It's our token's going to launch this year, hopefully before September 30th.
Okay.
The assets that the company's going to have on their balance sheets, the company is also itself going public. So once it goes public on either the NASDAQ or the NYSE, those are additional resources to be able to fuel the coin, to continue to market, to continue to buy assets, grow by acquisition, M&A, where we're able to do that. If we wanted to build our own blockchain like Solana, we can either build it or we could buy one and put money into it and make it faster, more efficient, less expensive than Ethereum. So there's a lot of flexibility and agility that our coin has that other projects don't.
I was just going to ask about that. So we speak to a lot of people, and I think it's the first time I hear someone say buying a blockchain.
Yeah.
Has that already happened? Is that relative?
We feel like MMA activity will be the next step in crypto. We feel like a lot of these projects will not survive independently after 2 or 3 years because they've relied so much on venture capital. If you Google now, if you're at home and you're on your phone, if you Google the term Binance token plunge, you'll see that there's an article that came out 6 days ago that shows that 29 out of the last 30 coins that they've listed have failed. And they failed miserably. And if you look at who's backing these coins, they're some of the biggest venture capital companies in the crypto space. You have Binance Labs, Coinbase Ventures, Pantera Capital. So a lot of these venture firms are just throwing darts at the board trying to land one success. And a lot of these projects are relying on VC money instead of creating their own value, their own profit plan to move forward and be self-sufficient. So I think that's the main problem of why these new coins all fail. They launch, they go down, there's no way for them to go back up.
Very interesting. I just to it. You just see that curve off on their market cap, basically. I also wanted to ask you what it's like to build in Canada. I understand you're Canadian.
Oh no, I'm American.
Oh, you're an American.
Yeah, I live in Miami.
I'm really bad at distinguishing between. Well, you're here in Canada, though.
Yeah, actually, we're here. It's because we're selling our coin prior to launching at 75 cents. We've been here 3 years in a row. The first year we were here, it was at 10 cents. Yeah. A lot of people are coming up to us saying, hey, thanks for the tip. 2.5 years ago when you were here. So this is probably going to be the last funding selling round that we have before going public. So we're giving everybody at the conference the opportunity to lock in at 75 cents. They can purchase the coins that are on our booth, or they can go online at unicoin.com and lock in the price right now.
Okay. What is your perspective on where the market is going? I mean, you have some interesting views around, all of the projects that, like, as you say, are almost likely going to go to zero. Over what time do you see that happening? I guess we're talking about a lot of consolidation, basically. What will the market look like at the end of, let's say, the next cycle?
I think the blockchain's here to stay. That technology is not going anywhere.
Okay.
That's left the station a while ago. I think the market's going to grow exponentially. The market cap for crypto would probably be in $20-30 trillion in 10 years or sooner. But I believe there's going to be a lot of M&A activity. We're not going to have 9,000 registered coins. Right now, there's over 10,000. There's probably a couple of thousand that are active. I think in 10 years, you're going to have less coins, better coins, backed coins that are maybe backed by assets, whether they're real estate, gold, or some sort of business.
Yeah.
I think you'll see less blockchains. I think there'll be very few good ones. Yeah, that are not expensive, that are fast. There's a lot of blockchains that are better or seem almost better than Ethereum and Solana. They just don't have the money to. One of them's Algorand. They've been able to muster up one commercial of online, which is a pretty good commercial. If they could do that all the time, they would be able to compete with Ethereum and Solana. So unless they come up with a partner that's deep-pocketed, how are they going to compete with some of these bigger projects? So I think there's going to be a lot of consolidation and companies. Yeah, companies like ours. Yeah, I think even BlackRock. Why wouldn't BlackRock come out with their own coin? Why wouldn't BlackRock buy a blockchain? Why wouldn't Google? Why wouldn't some of these big companies get into crypto and start buying companies? Look at Amazon, how they grew it. Selling books. Google, it was a search engine. Now they do everything. So we think that once crypto becomes mainstream, you're going to see a lot of these big companies move into the space and start picking and choosing which projects they want to buy. And even coins, if they're centralized coins like ours, they may buy ours. They may buy our entire portfolio of real estate, a REIT. And we could acquire, $5 billion worth of cash, keep buying companies. We could buy shares in publicly traded companies. We can buy treasury bills that pay 6%. A lot of our real estate is income producing. A lot of resorts, hotels. We have a casino. So it's not like we have to sell them.
Not a crypto casino.
No, not yet. But we can negotiate and partner with them. Maybe take crypto as payment at some of the casinos. There's a lot we can do, and we have the flexibility to do so because we're centralized. There's guys like me and you that make these decisions of what space we want to be in, or where we don't want to be in. If the technology changes, we can keep up with it. Whereas if you're decentralized, you're kind of handicapped because it takes a lot of time for you to be able to react to the changing environment.
Fascinating. Thank you very much for an insightful interview.
Thank you.
Thanks, Alex.